Good night, one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together, part 2, on April 27th, between 15 and 15:45 GMT. I'm giving the second part of the webinar. And in the first part, we have just used the live market quote page and develop the strategy, how exactly it could be used for reading the market, and also I explained about the trading strategies which could be used in the form of a hedging, and that can really in a position to help us to do either way trades in the market. Now, the first part, what I given it, is already recorded and it is available in FX Street website. So let me just display the FX Street web page. See, this is the home page of FX Street, and if you click webinars, you come across the webinars which are listed here, and also you come across a schedule and the archives. So once you click archives, you will be able to see already tracking the forex market together part 1 is listed. Once you click on that, you'll find the recorded version of the webinar is available here. Once you click play, you'll be able to listen to part 1 of the webinar. Why I'm giving it? Because many of the people are not in a position to have access to that of the webinars which are being recorded for the purpose of the visitors who fail to attend to the webinar, so that they can still continue to have the webinar in the recorded form. So I thought that I should show how exactly it could be tracked. Now coming to that of part 2 of the webinar. In order to understand the market, we need to know how exactly we can track the market. There are various methods like the technical analysis, fundamental analysis, and now you come across price action analysis, etc. So ultimately, there are some tools used in order to understand. Those tools are using the past data of the market. That is, from that of the last 1 minute to that of last 5 minutes or whatever it is. And it can be tracked back to as many days as possible. And from there, we try to derive what could be the next move. But my approach is use the live market quote page and see how exactly the current market is, and try to derive from there what could be the next move. So ultimately, the traders need what could be the next move, whether euro is going to go up or come down. So you can say that euro can go up to that of 1.33 or 3335 and things like that. There the resistance might come. And in the event if it falls, then you come across the support around 3150 and things like that. But ultimately, we are not in a position to say when it is going to come down or when it is going to go up, the time factor. Then second important factor is at a given situation or the price level, can we go in for a buy or a sell? Then the third situation is in the event if the market goes against, how exactly we have to turn the trade, whether we have simply stop out and say that our analysis is wrong, or do we have any other method by which we'll be able to earn still out of that position? So these are all the questions lingering in the mind of the traders. So ultimately, the traders need to find a solution, and that can act as a ready reckoner for them to really take quick trading decisions. And for quick trading decisions, the price, current price, is most important thing. So hence, I just insist upon my followers to use the live market quote page and try to read it in relation to that of the time. And the time factor is most important thing. In the charts, you find that the time is being given with regard to the past time. And if you use 15 minutes chart or 30 minutes chart or whatever it is, every 30 minutes, where the price was in the market, that is being displayed, either in the form of a point or in the form of a candle. And what was the levels of the high and the low during that particular time frame of 30 minutes or 15 minutes or whatever it is. Then exactly when the turnaround is going to happen in the market is not being explained. And even though we have various methods with regard to the candle formations to identify the trend reversals in the market, in intraday, if you identify what this man-made market is for, and this man-made market is mainly to make money, and the players are the big money powers, and they try to act against that of the other traders, including the institutions. So we need to understand what are the timings those players follow, and these are all the time frames the players follow, and also how exactly they use certain methods to communicate among themselves to make decisive moves in the market. And these things, if you follow, then we will be able to track them. So these are all the timings now. We are in US session. So 13:30 GMT US session starts, and we are in past 15 GMT. The early US session is over. And then afterwards you come across the mid US session, and the last 1.5 hours from 19 to 20:30 GMT will be the late session. Then afterwards you find till the opening of the next day, you find 4 hours of gap. And during this gap time only, you come across market is making very quick moves, and they open either with a gap on the downside or a gap on the upside and things like that. And these gap times are naturally occurring gap times, and because the banks in certain countries, when they close, the banks in other countries open with a 30 minutes gap, and they have identified that and recognized the gap time wherein the bank orders with regard to their bulk transactions, like the exporters and the importers, physical currency conversion trades will not come, and the players make use of those times in order to hit the stops. So you have to understand and appreciate the smartness of the players, how they have studied it, and you have to outsmart them. There is no other goal. Then, using the live market code page, we have to identify what are the initial lows and the highs set around 3:30 GMT. Between 2:30 and 3:30 GMT, the players set in the 4 majors and 2 commodity pairs the initial lows and the highs during Japanese session. Then those levels are being used as the reference level by the other players. So now let me give the link for the live market code page, and you can open it in a browser. Then I will come back to that of the live market code page after showing you the initial lows and the highs set around 3:30 GMT. So let me go back to another PowerPoint presentation slide, which I normally use it to record the initial lows and the highs on a daily basis between 2:30 and 3:30 GMT, and use it for during the Asian session live market analysis webinar. And there I used to explain how exactly we can identify the type of moves the players are trying to do it. Now today, 27th of April, the initial low in the case of euro was 1.3177. And during start of the European session, as I explained in part 1 of the webinar, they made the downward stop. And in order to make an upward move, to make an upward rise above that of the initial high. And during the part of European session, the part 1 of the webinar, I explained that they are staying above that of 32.24 in the case of euro, and making a dip and rising it and staying above and cutting the new high every 5-10 minutes. And even though it was 1 or 2 pips on the upside, then I said that they just gained above that of the high for 2 hours. Then afterwards also, from the start of the session, from 7:30 GMT up to 9:30, then again around 9:35, they made the cut of the high, which indicated that they wanted to do the intentional move. So I said that I'm not taking any position because market is near the high we can just do a sell and buy trade. But we know that they are making an intentional move of a rise for 2 sessions and part of the third session, and then start reversing. That is what I explained it. So those who are not able to understand, probably I'll repeat it again. So they just continue to gain the levels. But I was also explaining at that time that the players are also targeting the breakout traders. So those who try to buy after the breaching of the resistance, and if the market goes above, they try to take a buy position and try to close it with a profit. But if you watch it carefully, the initial high was 1.3224, and during that of the European session, they went up to 1.3244, just 20 pips. And towards close of the European session, they went up to 3270. You can see it in the live market code page. Then started making that slide. So from that of 24, 70 is around 45 pips. And if you fail to book it, it is already around 3253. And if you enter around 3335, 3235 and just close it around 3255, and the amount of tension what you are taking will be very high just for the sake of 15-20 pips. At the same time, we are not blindly taken the sell position just because it has reached the resistance or whatever it is. We have just followed the timings of the type of moves. So we wanted to take a sell position after the completion of the intentional move. So in the case of GBP, they made the downward stoppant, and I explained that downward stoppant is normally, or an upward stoppant, is just happen in less than 30 minutes during start of the session. So around 7:30 to 8, they made the downward stoppant. And you will be wondering why it is like that every time. That is how they make the moves, and they have got certain advantage. And instead of trying to go into the depth of those things, you can understand that these are all the timings followed by the other players, and we also follow the same time in order to understand. Suppose they are talking in Latin, we also try to learn Latin and try to track them and follow their wording. So now 61.69 is the initial low. They breached it and formed 61.54, and that was formed during the early European session. Afterwards, they went above that of 61.92, and current high is 62.56. Then hardly about 58 or 60 pips they gained from there to that of the high. Currently, it is trading around 62.32. So a breakout trader, unless and otherwise he is very smart in closing it near that of the high, it is hardly about 10 to 20 pips. At the same time, we identify that there is no point in taking a breakout trade because it is going to give a very less profit for us, and we'll be holding it for a long time to book about 10 to 15 pips, like a scalp trade. And they are holding high, and they're just inducing the short sellers to do the short covering. And when they are selling, then they wanted to drop the market again to buy it at a lower level. So we know their intentions. So we try to wait that they don't breach the new high formed for 30 minutes to 2 hours. Then start taking a sell position. So why they stop cutting the new high? Now the current high is 60 to 56. And why from the start of the US session, now it is about 1.5 hours. So 13:30 it started, 15 GMT is 1 hour and 30 minutes, and now 15:15 already. And still they are not breached the high. Why? That means they induce the traders to become bullish and try to take a long position. At the same time, they don't give profit for them. Only then they lose the patience later on. Similarly, holding high, they induce the traders who have gone short. In the earlier days, if you see that earlier days, the levels were all very lower levels. And so they want the short sellers to do the short covering before making a drop. So this is how holding near that of the low in order to induce the long holders to liquidate, holding near that of the high for a prolonged period for the traders who have taken the sell position at a lower level to go in for a short covering, is the strategy they try to use on a daily basis, session-wise basis. And so they don't change the pattern, because I have been giving these webinars and also giving these market reading techniques from 2001, still they have not changed it. You can understand that they cannot change it because this is the way they have to trap it. Because in the financial market, if the fund has to multiply without converting into effort, the only way is become cunning. Now, in the case of yen, 80.50 was the low and they just breached the low now during the US session. 80.42 has become the low and from there they started gaining the levels. 81.44 was the high set during the Japanese session. Still that is not been breached. So if you carefully watch it, that they are making the USD weakening move at the moment because the net changes in the case of Euro, GBP and Australian dollar are positive in the live market quote page, and USD USD CHF and USD Canadian dollar are showing negative net changes. So they are just making the USD weakening move for the traders who have gone short in Euro numerator currencies like Euro GBP and the Australian dollar, and those who have gone long in USD and USD CAD and USD CHF, they want them to liquidate the long positions. Now, during that of the European session, I explained in the case of USD CHF, they made an upward stop out and 91.18 was the high. They went up to 91.33 and they are not gone afterwards, and 90.87 was the low. And you know that during completion of the part 1 of the webinar, they came to 90.87 and they breached it and formed 90.52 as the low and started gaining the levels. Now 90.61, 62 are the current market levels. You see the net changes, as I explained, that the net changes are 33 pips in the case of Euro, 54 pips in the case of GBP. I'll show it in the quote page. If you have not opened the quote page, you may not be able to understand what I am talking about. So just 33 pips in the case of Euro and 54 pips in the case of yen, 56 pips in the case of GBP. They are all the net changes from that of yesterday's close. So whole of today, they just hardly gained 30-40 pips. You know, we enter into the market in order to gain at least 50-60 pips or 70 pips, 100 pips, etc. But when they are making such a subdued move, what sort of earning we can make out of that? So you have to think about it. You have to only look for quick moves happening in the market, then enter into the market, then there is a sizable profit we can earn. And simply holding a position and try to wait for the market to move and lose the patience, they may not be good trading strategies. And in the case of Canadian dollar, 98.44 was the low and they came down to 98.04, 30 pips below, and now come to 98.10 and 98.65 was the initial high. They breached the high and found 98.70 and came down. So you can understand, and also explain during that of the European session, they made the upward stoppant in the case of commodity pairs and also the downward stoppant in the same session. And similarly in the case of Australian dollar, an upward stoppant above that of 1.0397 to go up to 1.0404 at that time. Then they also made the downward stoppant below that of the low. 1.0359 was the initial low and they formed 1.0354. So you can understand stop-ins are the profit-making process for them. So during such stop-ins, if you try to enter into the market, you'll be able to get at least 50-60 pips. If you simply enter into the market when they are holding the middle level, hardly we can get 10-15 pips. So that is why I gave the statement, during quick moves, see that when they are dropping and stop cutting the new low for 30 minutes, 10 to 30 minutes, if you have become experienced, in 10 minutes you will be able to observe, understand that they are not going to drop further down, then you will be able to take a buy. Quickly in a matter of 30 minutes to 1 hour, they will gain the levels and simply book profit and say bye to the market and come for the next session. So this sort of quick moves you have to look for and then enter into the market. And don't become addicted to trading, simply take a position and asking everybody whether euro will go up or euro will come down and things like that. By that you stress yourself, but you don't earn anything. I just minimized the slide. I am coming back to the original slide. So after noting down the initial lows and the highs, now you can understand that how initial lows and the highs are very important to understand the whole day how much of moves they have done it. Then the net changes from that of the previous day, how much they gained, how much they lost. Then whether the market is near the low or near the high, we have to note it. If it is near the high and not breached the high for more than 30 minutes from the start of the session, we can try to take a sell position. And similarly, when they are holding closer to that of the low and not breached the low for more than 30 minutes from the start of the session, we can try to take a buy. Now, as I explained in the live market quote page, it is 15:15 GMT time. Okay. Now, this is the high formed by 13:30 GMT. You can refer it to the chart if you want. And 30 to 70, they formed around 13 GMT. Then 13 to 13:30 GMT is a gap time. Afterwards, they just made a dip initially for about 10 to 15 pips to induce the long holders to liquidate and then started gaining. But still, they are not reached the high. In the case of Euro, in the case of GBP, but in the case of and also in the case of Australian dollar. But in the case of denominator currencies, they made the downward stop, and in the case of yen, they made the downward stop, and in the case of CHF, they made the downward stop, and in the case of Canadian dollar. So European session start, they made the downward stop, and in the case of Euro, GBP, and Australian dollar. During US session start, they had done the downward stop, and in the case of yen, CHF, and Canadian dollar. Is there any fundamental which can explain why they are doing like that? This is the way they handle the market and try to earn money from that of the traders. Nothing more than that. So when they make such moves, when the market is near the low, not breach the low for more than 30 minutes, we can try to take a buy. When they are like this, and after breaching it, if they stop cutting the new low in 30 minutes time frame and start coming above that of the initial low, 80.50 in the case of USD yen, and in the case of CHF, around 80, 87, and in the case of, they are all the initial lows, and 98.44 in the case of Canadian dollar. When they come above, in less than 30 minutes, you can take a buy, and definitely you'll be able to see the further rise. That is what they had done it in the case of Euro, GBP, and Australian dollar, and they started gaining the levels after the downward stop went. So now you might think that they are all doing the USD weakening move, but they fail to cut the high. That means they are holding high, inducing the traders to do the short covering, but at the same time, those who are doing the breakout trade, they are not willing to give profit booking. So this is how they just make the traders to turn to one-sided traders, that is, predominant of the traders holding higher level longs. Those who have taken the lower level longs would have just booked a profit, or at least kept stop at entry. They are not being afraid of the market. But those who have taken higher level long, they may not be able to keep stop at entry, or they may just look for small profit and try to exit out of that because they are not breaching the high. No momentum is seen. So then the uncertainty creeps in. So this is how they handle the market. And so if you understand this, you'll be able to really trade at ease and make good profit. So majors are active during that of the early and the late sessions. Crosses are active during that of the mid sessions. Now we are in the mid session. They are trying to handle the crosses. Now let me explain to you the type of moves. I already explained in part 1. I'll just rush through this. There are moves, they do it in less than 30 minutes, namely stop and false moves. And these moves, they try to make a move of 10 to 15, 25 pips and just reverse it. So stop and is the one below that of the initial low or above that of the initial high. They just breach and reverse. And once they breach the initial low and come to that of the initial low in less than 30 minutes, start gaining the levels as a swing on the upside. Then they breach the high and stay above there. That's what they had done it during the European session and started gaining the levels as an extended move. And beyond 2 hours, started gaining further levels, cutting the new high, indicated that they wanted to do the intentional move for 2 sessions, European as well as US session. Then once in the US session, if they stop breaching the new high in 2 hours time, then we will try to take a sell position, because after the intentional move, they have to make an extended move on the downside. you will be watching it. You need not even take the position. If you just identify the type of moves, looking at the market, looking at all the four majors and two commodity pairs, then you'll be able to understand there is a real sense made. Then the extended move is for 2 hours, and afterwards they reverse the market. So for 1.5 hours, they continue to breach the new low or new high, and afterwards the last 30 minutes, they stop cutting the new high or the low and slowly reverse the market. That is referred as the extended move. And normally the extended moves are very quick moves, and you will notice that that they just jumped above that of the high in the case of Euro and GBP about 5-10 pips quickly. But normally when the market volume is really good, they used to make about 25 to 50 pips jump straight away. And in a matter of about 2 hours, they used to gain about 100 to 150 pips. And they have become the past history now. So hardly they make about 10 to 15 pips each time and just gain about 25 to 30 pips and start making the reversal move. It's very unfortunate. Market is not really giving good trading opportunities. It is because predominant of the traders have lost the money and they're just afraid of entering into the market. And new traders are also very cautious, and most of them are doing it in demo trading account. So that is why you find that there is a real lack of traders volume. The currency conversion volume is increasing, but the traders volume alone give the profit on an intraday basis to the other players. Not only the small traders, including the institutions who are doing impulsive trading. Then, if the move is more than 2 sessions, then we call it as an intentional move. Intentionally, they wanted to gain the level, or intentionally they wanted to drop the level. So during such drop, we will not buy, or during such rise, we will not sell. So that will be for 2 sessions and the start of the 3rd session, and then reverse. So start of the 3rd session, you would have noticed during your session, they just pretended as if they are going to breach the new high in the case of Euro 1.3270 and in the case of GBP 1.6256, but they failed and they have not done it. The intention being that they induce the short sellers to develop the fear and come for the short covering, holding it higher level, and induce the traders to take the buy position initially during start of the session. Now they are handling the crosses during mid sessions, and they are expected to come back to that of the majors during late session, and they may do a false move up to that of the high, or just make a small upward swing of 5-10 pips and then start making the slide towards close and simply say that it is weakened profit booking move. So we'll be wondering what happened to the fundamentals, and it is a weakened profit booking move. That is a market sentiment. So ultimately the market is driven by that of the technicals. Some traders think that the market is driven by that of the technicals because of overbought, oversold conditions, but the players can create artificial overbought, artificial oversold conditions and just act against them. And the traders think that the market is acting on fundamentals, and we know the example I explained it during that of the European session when there was a double recession, notice negative GDP in the case of UK, still GBP they gained the levels. So that is how the fundamentals are being taken into consideration by that of the players. Then you come across the market as a whole as a herd of traders having the sentiments. So herd of traders during weekend, they wanted to square up the positions and go irrespective of technicals and fundamentals, because they do not want to face the uncertainty holding the position during the weekend and look for some unexpected move on a Monday. So you find that weekends always you come across the traders become tired and wanted to close the position, either realize the profit or accept a loss. So that is market sentiment. So besides trader sentiment, you come across the market sentiment. So initially during the week beginning, you come across a market sentiment, and the players make the week beginning false move. Then exactly opposite to that, they do it on the second day. That is what on Monday and Tuesday they had done it. Monday they made the drop in the case of Euro and GBP, and Tuesday they gained the levels in the case of Euro and GBP. Then Wednesday they make the either way stop on moves. just make wide range, create uncertainty whether euro is going to go up or come down, and the traders are waiting for FOMC. Then 16:30 FOMC data, right? Then they make a drop, and 18:15 press conference they just make a rise. Then Thursday, whole of Thursday they have been holding high, and Friday they made the drop during that of the early Japanese session and gained, early European session and gained, and now they are holding high for the traders to lose patience and do the short covering, and later on they will also book profit and go away from that other market. There ends the week. Then the next week. That is how they try to look into the other weeks, and they don't have any sentimental attachment to the euro or GBP or whatever the currency pair, and none of the countries are going to pay them anything. Only the market is going to pay them the rewards in the form of profits. Now, the trading strategy, what you have to use it, because when such big players are looking for trade strategies, and also they try to limit the risk, not using stop, they have other methods of doing it, but we have to definitely think of money management, use the entry stop or the hedging order. In US trading platform, the hedging order is not available, or entry stop facility is not available. You can use the stop. Otherwise, you can use a corresponding cross as a hedging instrument. Suppose you have got a buy sell position in euro at 1.3256, then you can correspondingly take another cross like euro yen, because both euro and GBP are making USD weakening move. In euro yen, you can just take the opposite position. When you take a sell position in the case of euro USD, that means you are just selling euro and buying US dollar. So against yen, you buy dollar. So that way you try to use it. So if you take the hedging of that way, or physically there is no need to buy, you can keep 30 pips above the market if you want to buy, or 30 pips below the market if you want to sell. You can keep the order to limit the risk. That is one way of solving the solution. So that situation. So if the market moves against you in an unexpected way, you've got another position open, and you can see whether it is good to hold the original buy position or a sell position or a buy position. So if it is a buy in euro or sell in euro which is not giving good result, then sell in USD yen will give good results. You can just close euro position and try to maximize the profit in the case of euro yen. That way you can minimize the loss. Since you are using only 30 pips to limit the risk, if you earn 30 pips or more above in the other trade, you can just come out of that. Then entry, as I explained, we wait for the market to show the exact trend for 30 minutes from the start of the session. And if you already noticed in the case of European session and US session, whether it is an extended move or intentional move, then you have to wait for the duration. That is the advantage of identifying the moves. If you identify it as an extended move, after 2 hours you will commit a position. If you identify it as an intentional move, you will commit the position after 2 sessions and the start of the 3rd session, and then try to commit a position. Now we can slowly see that they are making the dip in the case of euro. Just they are building sell position, but they are not going to drop straight away. Make about 5 pips dip and quickly gain, and 5 pips dip and quickly gain, and make about 1-2 pips gain and just hold it. Pretend as if they are going to gain the level. So that is a way, a cunning way of, and the pretension is very important for them to make money. So once the new high or the new low is not breached, then take the sell position. No sentiments to the market, and we don't go with it of the market sentiments, and we actually follow the players' sentiments. Whether the players wanted to book profit of their buy positions and wanted to drop the market, or they wanted to drop the market and buy against their sells and take fresh long position before making further rise. These are all the only things we read and trade along with them, because they are giants, we cannot trade against them. Then exit is also equally important. Once you have committed a position, opposite side, if you are taking a sell position near the high, your initial target will be the low set of the day and initial low. Then we will try to keep the limit order there and keep a trailing stop and trail it down in a profit making position and try to close it. the market might close your trailing stop or the limit. If the going is good and they are continuously dropping, you just move the limit order lower to maximize the profit. Still, the trailing stop will continue so that you'll be able to maximize the profit. This is a simple method of trading strategy. Thereby, you see that first of all, you avert the risk by keeping stop at entry. Then subsequently, when the position makes 25 pips profit, you make it as a trailing stop, and you try to take a chance with regard to the amount of profit. Because similar to that of controlling the fear, we have to control the greed also. So if you have a greed to earn about 300 pips, but the players are willing to make only a rise of 50 pips, then you should not lose such opportunity. So you won't be knowing whether they wanted to rise 100 pips or 150 pips, because it all depends upon the pending positions of the traders who wanted to do the short covering for the weekend. So it depends upon that. So in such scenario, they only know the quantum of shorts which are going to be covered, but you won't be knowing it. But we can read from their market moves, because they cannot keep it as a closely held card forever. They have to expose it in the market by making the moves. So we closely monitor the moves and try to see what they are trying to do it. Only then we trade along with them, nothing more than that. Still, we use the trading strategy because our reading can go wrong. Because after all, we are human and we may become suddenly biased, or suddenly we may become afraid or become over greed and trying to maximize the profit. And we cannot just like that say that I am out of those things. I am a sane professional. No one who can say that, because emotion is part of our life. So we have to become emotional. We cannot just like that control it, but we can control it to a certain extent by drinking enough water and things like that, dilute the blood so that the endocrine secretions get diluted and we are not aggravated. So we have the trading strategy to limit the risk and maximize the profit. When those strategies take care of your position, so your emotions cannot take a vital role there, unless and otherwise you move back your trailing stop. So when the position is hedged, this I explained it during the European session, and now it may not be required because in US trading platform that hedging facility is not available. Now coming to that of the US session trading position, as I explained that they are not breached the high, so we'll only think of doing a sell and buy trade, aiming only a small profit of 30-40 pips. They may not be, because they will be holding at a higher level and trying to drop towards close. So it will take a longer time to book profit. Towards close around 19 GMT, we'll be able to book profit. But still, I will show how exactly the trade is. You can do a paper trade and find out whether it is working or not. As I explained that even after 2 hours, they are not breached the high which was set by end of European session. But if you follow European session, my timing, what I have given it as far as the players are concerned, then it will be correct. And if you think that the European session has to close by 16:30 GMT, so Euro, we will try to take a sell position. And when the market is trading around 1.3252, we will try to keep 10 pips above a sell limit order. And those of you who have been following me know very well, because they are bound to make swings. And during an upward swing, we want that position to be order to be filled, and we don't directly take the market. If it is not filled in 30 minutes of time frame, then we try to modify and take it in the market. So it will be 1.3262. It is a limit order. Then exit will be 1.3177. That is the initial low. So we wanted to keep an entry stop or a stop 30 pips above. That will be 1.3292. So this is how we keep the order. And if it is filled in 30 minutes of our observation, then fine. Otherwise, we'll try to take it around 30 to 52 or 30 to 55 and wherever it comes. And then try to keep 30 pips above the hedging order or the stop if the hedging facility is not available. So we only keep a sell limit order now. So it is not a position. Similarly, in the case of GBP, 1.6256 is the high. We are not breached the high, so we'll take a sell limit order. $1.6252 because currently it is trading around 1.624241. So just 10 pips above, you keep a limit order. Then our profit booking level will be 1.6185. That is the initial low. And our stop will be 1.6282. So it is a sell limit order. And as I explained earlier that during the European session, I have not taken any position. That is why I have not gone back to that slide, because we identified it as an intentional upside. So we do not want to simply commit a position. But still, if you are a smart trader, then you can try to take a sell position near that, above that of the high, and keep the hedging order. And once the hedging order is filled, we can book profit on the upside. Then when the market slides, we can book profit on the downside. But when the position is hedged, many of them become restless. So it is very difficult to convince them to use the hedging. It is something like when you try to drive a car and you have the brake. Because in the event of emergency, we need to apply the brake. And nobody can say that I do not want the brake, I do not want to have a jerk during the drive. And similarly, we have the reverse gear. So, and nobody can say that I will not use the reverse gear. I can only move forward, I will not go backward. Because, see, in a car, you have got a facility to apply brake, you have got a facility to go forward, go backward. Similarly, in the market, you have the facility to do a sell and buy trade or a buy and sell trade at any given time. So we try to identify it, and when it is hedged, then what happens? On the hedge side also we book profit or close the hedging with stop at entry, and the original side also we try to book profit. So let them take the market upward or downward, we are in the money. So that is how we should view the market and perceive the volatility as a great trading opportunity. When you get rid of the market fear and understand that I got the limit and I am limiting my risk using the hedging order, I am not taking more than 30 pips risk. And if they hit the hedging, then I know how to handle it. I'm not afraid. I don't become panic or upset because they hedged me. So if you are able to develop the mindset, then you will be able to use it effectively. Otherwise, you can learn the car, how to drive it forward. You may not be able to use the reverse to make the parking. And you know, when you use the reverse gear for the parking, you find it is much easier than using the forward gear and parking the car. And those who know the driving know very well how exactly it can be handled. So these are all the two positions. Two orders I kept it at the moment. And if it is filled, then you can track it because I may not be available here during the webinar continuously. So you can just give a remark to me later. Let me minimize the slide and try to answer to that of the questions which are asked here. Meanwhile, I'll focus the camera over that of the line of the foot page. Not many questions. Good. Then Robert, today my trading platform has shown a condition called auto close, in which my position in euro was closed without my approval. Yes, that happens because of the either margin, due to margin constraint, or it might be due to some other conditions. See, this is part of the game. See, besides the players manipulating the market, earning from that of the traders, you find the platform providers also try to play tricks with that of their own clients. When you open an account, you will get the red carpet welcome. Once you open an account and deposit money and start doing trades, you call them 100 times, they may pick one time. Then Prince. Do you see euro and GBP coming anywhere close at 1.3150 and 61? They may not drop in a very big way, but they are expected to make the slide to 1.32, and probably they may come to that of the low by Monday, 3150 area, and also in the case of GBP around 6130 or 6120, and then start making the gains. Because week beginning false move, and also Monday is a month in time, so they will try to handle both sides on the upside as well as on the downside in the case of the derivative market. Then afterwards, the new month has to start, and they have to induce the traders to take wrong positions in the derivative markets. Then they come to off the market action. That is why you come across, irrespective of non-farm payroll or BY or ECB rate decisions, etc., market has got own way of handling those things. Simply they can say they have discounted the data, or simply they can say that no, that is discounted and the future could be very promising. Or they can simply make an opposite move against that of the herd of traders who are expecting the move and say that it is risk appetite and risk aversion, things like that. Or they may continue to give new terminologies. You know, the risk aversion, risk appetites are prevailing in the market for 2-3 years now. And earlier, you know, that carry trades and this sort of terminologies, they used it, and in coming years, you'll come across new terminologies emerging in the market, and they will try to use such terminologies to confuse the traders. And you will be looking into Wikipedia, what is the actual meaning of such words and sentences, etc. By the time you will come across new financial statements of that nature coming in, phrases coming in. Okay. Now, Pico. Do you expect USD gaining in all 6 pairs? Yes. Today and tomorrow, from this and tomorrow, as per the forecast, and also in the market reading, as they are not cut the new highs. And only in the case of denominators, they cut the new low, and further they are not breached it. See, 80.42 they are not breached it afterwards, and 90.52 they are not breached, 98.04 they are not breached. So they are simply holding it and creating the fear they could breach it, and inducing the long holders to liquidate it and later on to reverse the market. Ultimately, if a position is taken, they are all leveraged position. Some might be doing with 1:100, some might do it with 1:400, 500. The players might be taking it at 1:30 and things like that, but they are all positions. And the positions taken in the market are to be closed. So the players have got their own money in US dollar only, and they have to just use that to buy euro and GBP by making a drop and buy. Later on, gain the levels and just book profit and talk bullish, bearish, and things like that. Alternatively, talking about the economic conditions, and we know our economic conditions are just vibrating every second. Because of that, the market is also making such volatile moves. Then DT. What is the reason that you did not put in any limit order in Australian dollar? I have not taken any position in Australian dollar because I want to just show it as an example. That's all. Then Scooty. My idea is not to trade and show that I have made a profit and things like that. I wanted to suggest a trading system, and if you find it is beneficial, you can make use of it. Or you can just improvise on it, because I'm an old man, so I had developed it using about 20 years to develop it, and you can use all your energy and further develop these techniques and refine these techniques and try to outsmart the players. That is what ultimately I want. then Scooty. From Tuesday onwards, euro is gaining the levels. Yes, I explained it. They have been gaining the levels and they are expected to make volatile moves for the month end. Shan, can we take USD yen position for a few days? You can take the buy position in USD yen and they are not expected to make a very big drop. How much gain is expected in euro? They may just gain about 5-10 pips and drop. But next month they are expected to make a very big rise in the case of euro and GBP. Keep it in mind. So don't think that I recommended sell and buy trade now that I am bearish in euro and GBP. It's not like that. They're all just trades. But they are expected to make from that of second week very big rise in the case of euro and GBP. So in the first week, and probably I'll give the brief forecast for next week because I will not be available to do the Asian session live market analysis on Monday. So tomorrow, Monday 30th, they're expected to make the nominal gain during that of the Japanese session and start making the slide again as a week beginning false move on Monday during European and US session. On Tuesday, they are expected to make further drop in the market in anticipation of the prime data release and things like that. On second, they are expected to make a drop in the market. In market in the sense, euro and GBP. Then on third, that euro is expected to, ECB is expected to announce the interest rate. And for that time, they are expected to make the drop before that of the ECB announcement. And after the ECB conference, they are expected to gain the levels. And those calls, I have given it already to FX Street, and that will be published in FX Street homepage with regard to the expectations for ECB rate decision and also non-farm payroll on 4th. After non-farm payroll, again before non-farm payroll released by 12:30 GMT on Friday, they are expected to make a drop in euro and GBP and continue to gain on 4th. That is next Friday. So the week after Monday, 7th, I'll be available to give the Asian session live market analysis. I have to be out of station for some time. So you'll come across more gaining moves in those times. From 7th onwards till 31st of May, you'll come across considerable gains in the case of euro and GBP. At least I'm expecting about 300 to 500 pips in a conservative estimate, depending upon the current market moves. Some questions have come. NDT, do you expect Aussie to slide? What is expected of euro and GBP for the rest of today? Euro and GBP are expected to make small slide, and also Australian dollar still it has not cut the new high, so it is expected to make small dip. And Jack, can you show us the monthly actuals versus? Yeah, I will probably do another webinar pertaining to that of the forecast for the year 2012 and what happened to that of the actuals when compared to that of the expected market moves. Sometime I'll try to get a slot and try to give. Dr. Answer questions. Solomon, Jack of Euro. Yes, I'll be giving it for Euro. Soulman, I'm not able to understand what it. I do answer to the questions, but it is closer to that of the session close of the webinar close time. So I may not be able to take up further questions. So for the benefit of those who are attending the Asian session live market analysis, I explained that next week, Monday, 30th, 1st and 2nd, we will come across more downward moves in the case of Euro and GBP, holding high and slowly slide, holding high and slowly slide, that sort of moves. And from Wednesday, we'll come across considerable gain. Thursday, 3rd and 4th, will come across the rise or the gains in Euro and GBP are expected. Before that, you will come across the denominator currencies gaining levels, USDN, USD CHF, and USD CAD. They are expected to gain the levels. Since it is recorded, you can tell others if you want, they want the forecast, they can just listen to this. Let me go back to that of the PowerPoint presentation. Okay. Now, still the order has not been filled. So you can understand that 10 pip above we are keeping it, and see, we are trying to fine tune our entry, but they are not making big rise. So still we'll wait for another 30 minutes and see whether they are making a small rise and try to take it, because already they have made a dip to 30 to 48 in the case of Euro and 60 to 38 in the case of GBP. But during drop we will not see. Similarly, after the drop, we will not look into the technicals and say that it has breached the support and gone below, we'll sell. Then that is how they trap the traders. So we will not become victim again and again following such techniques. So these are all my contact details. My website address is given, and also my email ID. If you want to have any clarifications, you can send me email at the doctor@iknowindices.com. And I have given my chat IDs also, MSN Messenger and Yahoo Messengers. And you can use it to contact me, add it in your contact, you will be able to contact me. I can just give the live interactions to you. I'm available from 3 GMT to 18 GMT on a daily basis. Then my phone numbers are given. If you are in an urgency, you can go on to call. But always keep it in mind that by giving a call, you are preventing so many people getting the answer in the chat. As a single man, I am handling these things in order to convince the traders. So you have to understand my limitations. So I'll come back next month, in the month of May, again give you Tracking the Forex Market Together webinar and also the Asian Session Live Market Analysis webinar, and try to fix a slot for reviewing of the first 4 months of the market moves in the year 2012. Thank you one and all. See you next week. Wish you a very happy weekend.